We got news last week that the Fitch Ratings agency had changed its rating outlook on South Africa's BBB plus rating from stable to negative. That was late on Friday. They're citing the limited progress on some long-standing structural issues. Moody's investor service made a similar move. That was in November of last year when it changed its outlook on the sovereign A3 rating, also from stable to negative. So we're joined by a familiar face on the program, renowned economist Dr Azar Jammine, chief economist and director at Econometrix. Thanks so much for your time. Azar, what is the meaning of a credit watch? What does it mean where we move from stable to negative?
What happens is that credit rating agencies typically revise or keep constant their credit ratings from one year to the next. They do so more or less on an annual basis, having conducted research into the economy and other factors of a country every year, and then they come out with their credit rating. What the credit watch does is to try and give you an interim feel for what they might do next. And typically there are three credit watches: positive, stable, and negative. What one is told is that positive essentially means that there is a 2/3 chance that the next revision will be upwards.
Right.
A stable is that there will be no change, and that negative is they give you a warning that unless certain things happen, they will change the rating downwards. Now, what that in turn means, what does the rating itself mean?
Right.
Theoretically, it's supposed to determine the cost, the interest rate at which governments can borrow money. And the lower their credit rating, theoretically, the higher the interest rate.
So is this a precursor then to a downgrade for South Africa possibly in the next year?
It is a precursor to a possible downgrade in the next year. Having said that, we had a similar downward revision of the credit watch 2 years ago from stable to negative, only for that to be reversed again back to stable the following year, and now we're back down to negative. So in fact, 2 years ago when we were put on that negative watch, that did not ultimately translate into a downward revision.
We're told that Fitch and also Moody's as well, their concerns about South Africa is that national output is very slow. We're not growing at the rate we ought to be growing. Instead, unemployment is rising. And then there's some concerns also about the democratic ethic in this country. If you look at Transparency International's governance ratings for South Africa, where we've fallen a few notches, is that something for them to be worried about? And some would argue that if we're not growing as fast as we ought to, it's also because of international forces. It's European sovereign debt issues. It's general global slowdown.
Yeah, I think the way I've looked at this is, a year ago, Fitch revised, as I mentioned, our credit rating watch from negative to stable. And now, a year down the line, they've gone back to where they were. What has changed? And I think there are two key things. The first is that South Africa, with 30% or more of its trade with Europe, has been negatively affected by the European sovereign debt crisis and other factors. And as a consequence, this has depressed its growth prospects. And so Moody's and Fitch are saying, goodness me, 2.7%. We're back facing 2.7% growth this year. We can't get out of that and to solve our unemployment problems. And then the second leg of that is, oh, well, if you can't solve unemployment, what is going to happen? You're going to see more and more populist forces, and that's the second issue that has cropped up in the past year with Malema and co. calling for nationalisation. It's giving the impression that there's going to be more and more pressure on the government to spend more money to redistribute the benefits of whatever economic growth happens to the poor.
Let's talk about those populist policies at a technical level, because we have seen public borrowing increase, something like 40% of our debt to GDP ratio. That's the figure. Some are saying that's a manageable figure. But would the government be spending on consumption, given that 60% of this economy is a consumer-based economy, purely because people can't afford it? And what does that mean for fiscal management?
And that's precisely, I think, what Fitch is concerned about. They actually suggested that 53% of whatever government spends is on wages and salaries in the public service and on welfare expenditure. And rather than on infrastructure and real economic activity. So where's that going to head us for? And what they're theoretically, credit ratings are particularly concerned by that figure that you mentioned of the debt to GDP, and they say, well, the only way out of this may well be that government increases that figure a lot further in the longer term. In that sense, I think they've maybe have done us a favor. They've certainly given the National Treasury a bit of ammunition with which to respond to accusations that it's far too conservative and not doing enough to boost spending.
You mentioned the fact that we've seen dwindled trade figures with Europe, obviously. What does that mean for the South African rand, given that we are seeing it weaken a little bit? The unions would be happy with that, but we also need a significant proportion of what we produce being exported internationally.
Yeah, look, the fall in the rand is beneficial from a certain point of view because it was terribly high, and it was high in part because billions of dollars were flowing into our bond markets. Yeah. That situation now with these downward revisions or downward credit watches has been diminished. Therefore, I think my interpretation is that we will attract a bit less money into our bond market, and as a consequence the rand will remain at these lower levels or weaken further.
We've just about run out of time. Social implosion here. They did also mention the fact that you've got a very small tax base and taxpayers are overburdened in this economy already. So there's a huge divide between the rich and the poor, and you know that locally that also has its racial overtone. So for the future of stability and unity in this country, is that something to be worried about? Of
course it's something to be worried about. The only thing why people are a little sarcastic about this latest downgrade is we've had these problems now for several years. Yeah. So what's new? Why decide now to revise down? Yeah.